Well, good afternoon. Good afternoon and welcome to another of our webinar Wednesdays. Good afternoon. I'm Kelly Bearden. I'm the director of the CSU Bakersfield Small Business Development Center. And as you can see, I am remote today. Have the green screen out with no filter, no background to show you. Zoom's hiding it from me today, but we'll go green today. So good afternoon. This is webinar number 256. Got a special guest today coming in. Jay Thompson will be appearing on videotape. So one of the 3 times in the 256 webinars that our guest has been on video. But with everything going on with holiday travel, hope you had a great Christmas and great holiday season. Happy Hanukkah, etc. So and we're moving on to a new year. So let's start moving. Today's webinar is going to be our last of 2022. Not going to go down as one of my favorite years of all time, but hopefully it was a lot better for many of you out there. So our webinar Wednesday, we had our webinar streak broke in November, and actually did not do a webinar in November after going 139 consecutive weeks with the webinar starting back with the pandemic in March of 2020. So in 2021, 52 webinar Wednesdays, and then a ton of them also in 2020. So we'll be back in 2023 with that. So we are springing forward into 2023. So that's a little bit about Webinar Wednesday in 2022. Really, a lot of focus this last year was on the pandemic programs that were still in place early in the year, particularly. And then some of the new added programs that were really helpful to small businesses and help them survive. So today also, we're going to get into some capital access news like we're prone to do. You know, we like to talk about the economy. We like to talk about accessing capital. We like to do other things that help small businesses get that information on a weekly basis. So we'll talk a little bit about capital access and where we see 3 great ideas for 2023. The economic news that is a must find for you in 2023, meaning that in 2023, with some of the general economic conditions that have been going on, they're going to continue to affect your business, and there's going to be little that you can do to actually counterbalance that. But I said little you can do. There are actually a few things you can do, and we'll be looking at it a little bit about that. We're going to have Jay Thompson join me in a little bit for some great last-second advice. And this could be tax advice. It could be entity advice as far as if your business is a sole proprietorship, an S corp, partnership, whatever. So a little bit of kind of these last bit of legalese, maybe a last minute tax deduction for you in 2022 if you need to kind of try to cut your taxes with 3 days left in the year. So we'll get some great advice from Jay. Well, we'll ask you also, a great way to stay notified in 2023 will be to attend Webinar Wednesday. We plan on being here every Wednesday. And until I got COVID in November of 2022, it worked that way. But we're back. We're good. As always, we're going to take your questions. Your questions for Jay are going to need to come in an email form. So send us an email. If you have questions that you think I can assist with you, I will be glad to answer your question at the end. And then also our poll questions. And so today being, a lot of people like to talk about the year in review. I'm more of a spring forward kind of guy, like you're going to find out, but I do want to know your greatest business accomplishment. And so we'll look at 22 and 23 in our 2-part of our 1 poll question here. The first part of it is going to be, what was your greatest business accomplishment in 2022? You survived. You started recovering in 2022. You held your own in 2022. You thrived in 2022. Or if you have anything else other than that, please add it to the chat. And that is question number 1. And it looks like I have a little issue with question number 2. So I have that is up and going. So the first poll question is, what was your greatest accomplishment? The second poll question isn't going to be able to work because it doesn't have really good choice. Choice number one is it's going to be better. And choice number two is it's going to be worse. So a little flaw there on poll question number two to end the year. I wouldn't have it any other way. But question number one, your greatest accomplishment. Did you survive, recover? Did you hold your own or thrive? Or anything else you can add to the chat box, and we'll try to pick that up at the end. And then poll question number two is going to be, will 2023 be better or worse? Choice one was going to be better. Choice two is going to be worse. So there you go. Give you another couple of seconds to jump in. We got 73% of you already participating. So that's great. And what we'll do is we will end the poll and share the results. And with 41% of you reporting, you survived 2022, the most common answer. A tie for second was you started to recover and you held your own. And then 15% of you thrived, 7% added something to the other chat that we'll look at later. So it's good that you survived, 41% of you, and started recovering. And there's that 15%, always around 15 or 20% that do good when others don't. And I can't explain it. It's that wonderful 80-20 rule. We know it, we live it. And then the second question, which I'm not even going to really kind of even look at because I kind of goofed that one up. So, but we just wanted to know, and maybe we'll ask next week, will 2023 be better for your business? Will it be worse, or will it be the same? So thank you for participating. Appreciate that. And let's move on. There was the national poll that we were going to compare to with the better, the same, or not the same. Okay, so what are some possible programs on the capital side of things some possible programs that we see for 2023? We're starting to see, and I've mentioned this over the last couple of weeks a little bit, that many of the pandemic borrowers, particularly those that have idle loans that had a 30-month, 2.5-year deferment, that went 2.5 years before you had to make a payment and receive the money. Well, those are becoming due now, and there are a lot of borrowers that are still facing difficulties and having a difficult time repaying that idle at this time. If you are one of those people, or you know somebody, have them contact their SBDC or call the SBA. Call the SBA call center for idle. It's in Texas. We generally will throw that number in the chat box and run around with that. But what you want to do is you want to make contact and you want to discuss the situation to maybe get a longer deferment period or other solutions that you might be able to think of with SBA. But if you're running into a problem as far as making the payment now that the deferment is in, that is the best way to approach that. Kind of my soapbox that I like getting on these days is that there's this great program for on-the-job training that reimburses up to 90% for smaller employers. I believe those are 50 employees and less under that category. So a good number of you out there, 90% reimbursement. But this last year, as of November, only 20% went to our smaller firms. And so it's a great program that the larger businesses are taking advantage of. So the on-the-job training program, for those that want more information on that, just drop us a line or contact America's Job Center. They will be able to help you maybe go through that particular process. Now that's going to be for more or less those employees that have a kind of rigid or a very specific type of training program. It's not going to be your normal employees that maybe you're able to train on a shift or two. It's going to be those that are maybe operating machinery, maybe taking on new skills, adding new tools to their skill set, etc. But you really want to be looking into maybe saving during this period of time, this 3-month period of time when they're training, saving 90% of the wages for that period. And also, Jay and I will get into it a little bit with the employer retention credit, but the employer retention credit also remains a particular program of interest. So the capital quarter. So our access to capital, that's what we like to do here. So we're going to talk about some of the potentially funding programs that we see are going to be popular in 2023. And let's start with one that we've talked about a lot in 2022, and that is the State Small Business Credit Initiative. This was part of the ARPA stimulus package, of which about $10 billion across the country went to states to help them with small business funding. California got the largest portion by far, 1.1 billion. It comes to the state in what they like to call tranches. And and a tranche is not like a big wide envelope that's handed to them by the federal government. It's a wire transfer of some of the funds, be it maybe 20% of the allocation of that 1.1 billion to use, and then request more. So the state wants to use this money. They want to get this money out. They want to help small businesses. It's kind of contrary to what you're seeing with the Federal Reserve, where they're trying to raise rates so people won't expand their business. But there is money for those businesses that feel that they can support and make it through with the State Small Business Credit Initiative. And some of the programs that are going to actually be enhanced because of this money is the work that's done by the California Pollution Control Financing Authority. They have a program called CalCap that works with the bank, and the bank will make the loan. And there is an amount that's put into a fund. I believe it's like around 4% that actually supports the program. And that 4% goes to actually work with those loans that might go bad at any time. Now, another program I haven't had a lot of work with. I really don't know the program well, but I think we're getting ready to go through it with a couple of clients. And that's the collateral support program through the CPCFA. And that basically looks at a deal and it says, boy, this is really, it's got a lot of good things going for it, a lot of the things that lenders like in capital programs. You have money that you're putting into the business. So you're not asking for 100% loan. So you got a down payment. The condition of your business or the industry that you're going into is really good. You have good background in that particular area. It's one of your strengths potentially. And, so a lot of things are looking really good, but you don't have that collateral, that security. Typically, if a lender makes a $100,000 loan, they want $100,000 worth of assets pledged. Well, in many cases, that doesn't work. And that is sometimes the only reason why a small business loan does not get funded. So using this collateral support program, it comes in and supports that collateral piece when everything else is in place. So we're really looking forward to trying to work with that particular program in 2023. There's also some loan guarantees that are made by some of the California regional financing corporations throughout the state. There's one in Salinas with CalCap, and also one in Fresno, Valley Small, a couple others throughout the area. But those programs have loan guarantees and they have a substantial amount of capital. And there's also going to be a program that supports underserved equity partners. So underserved equity type of arrangements, such as a angel network for underserved clients. And that could be rural, it could be people of color, it could be minorities and such. It could be veterans, it could be women. A lot of different fall under that particular category, but it's going to help those particular business access investment capital that they can use to maybe put into their business. So that's obviously going to be one program that we're going to be watching very carefully. Another program we've talked about a lot in 2022 has been the micro grant program from the state of California Office of the Small Business Advocate. And that program here in Kern County is actually applied here in Kern County. And actually what it does is it does a number of different things. It provides a $2,500 grant to those small businesses that actually were in business in 2019 and made less than $50,000 gross receipts. Now, that's not net income. We're talking about a micro small business and a micro grant for that business. And these funds are going to be available, it looks like, until May of 2023. So one of the other big conditions is if you receive the California Micro Grant Program, which was either $5, $15, or $25,000 through lindustry.com, you cannot apply, and other restrictions apply as well. But still, our smallest, oftentimes our vulnerable and most neediest businesses are still out there, and they still need this $2,500. We're also expecting to see entrepreneurial programs likely, to boost business starts in 2023. We're expecting local and maybe a return by the state program like the California Dream Fund. So there could be probably not opening up the year in 2023, but as we move out through a few months of 2023, we're really hopeful that we're going to get those programs back where people can actually be trained and attend a training class and use that education in order to write their business plan and actually get some one-on-one guidance and consulting and start a particular business with a grant of $5,000 or $10,000 from a state or local agency. So we're hoping that that returns also in 2023. On the economic side of things, we will have an economist in here in January. I will tell you that. And for 2023, what you need to know as a business owner is how is inflation affecting you and your business? We know how it affects us as consumers oftentimes, but how is it affecting your business, and where are the strains and where's the pressure points going to be moving forward with inflation? We've seen inflation dip. We've seen mainly some of the housing and some of the energy costs that have come down, but there's still a lot of pressure in individual businesses, and understanding where that pressure is going to come from you is really important. It's interesting talking to a lot of businesses out there still about what's been going on the last 6 months or so. Get out of COVID and get into this economic mess. And really, it's really disheartening when you hear somebody tell you that they own a restaurant and they can't charge enough to make money in their particular business at this time. And I know that that's true in a lot of the food and beverage businesses, but it's also affected by many others. The other thing is you want to start estimating some scenarios of what's going to take place with your business with a recession or some other economic factor. But let's just say recession is going to continue to slow. Sales are going to continue to slow as the Federal Reserve uses recession or the threat of recession in order to fight inflation. Look and see how vulnerable your business is in some of the scenarios that you have, and maybe try to start planning and then really factor that strategy into 2023, either with a business plan, an index card for that matter might work, or maybe using a few other tools that we have that maybe you could access. Just so you know and remember, we do have our CSUB YouTube channel and some of our more topics of note recently. We had one on COVID idle resources. So if you have any issues with your idle or you're paying it back and want to see more information on that, you can go see the one from October the 12th with Israel Lara Jr. Cybersecurity still going to be a huge issue in 2023, and really can't underscore enough the importance of cybersecurity. HR and California law update. We had one in May. We're going to have another one coming up here probably in later January and February to go over all the HR and California laws that have changed with our restaurant specialist, Celeste Young Ramos. Cal Savers, hopefully you got involved in that. And also the Eastern Sierra Capital Summit, our Access to Capital event. All of those are on YouTube and a few hundred others as well. We have our restaurant revitalization tax credit that might be in the works. And for those that did not and who applied and did not receive the restaurant revitalization fund, because if you recall, probably only about 30% of those that signed up, and they all signed up the first day for that particular program, received that grant. About 175 restaurants around the country did not. So they're looking at doing a tax credit that would offset some of the payroll taxes And it would even be a better benefit for those that have 10 or fewer employees. And there is a cap um, on that particular for those that have over 12 or 10 employees. So there's kind of some of the criteria if you're interested in that. This is not law yet. It has not been passed by both houses. It has not been signed by the president. But there is a lot of considerable movement in this particular area for this restaurant revitalization tax credit, and it's something to keep your mind on it if you would had applied for that and did not receive it. So lastly, just a few tools for your business. You might be getting something from us because we value your input on topics you'd like to see. And I throw this up here saying, hey, you might see something like this coming your way on telling us ways that we can improve and to let us know what the best way is to help for your particular business. We only have 4 questions. And who knows, it could even go out today at 4 o'clock. But my main reason for putting this up here is from your particular business point of view and getting input from your clients and your customers and continuing that process and that dialogue of knowing what your customers want and with the new year coming, what they're going to want in 2023. So continue to do that and look at ways that you can survey your particular clients and your businesses, and you might actually see one from us as well. As we move into 2023, you know how much I really like this particular form. If you've been on a webinar or 2 with us, it is our cash flow forecast, and it's a great business budgeting tool or technique because it is so simple in so many regards. One thing that it does and does really well is, let me pull up the Excel spreadsheet if I can. And of course, it doesn't want me to. So we'll just stick around with the slide. So, just kind of looking at that particular, maybe. So looking at that particular spreadsheet, the great thing about this thing is it really is interactive and allows you to keep up with it on a month-to-month basis. I have 2021 up here. On my spreadsheet, I had 2022 because you could even go back over the last couple months and figure out where your cash flow was going in your business. And then the next year, start off and budget with how much cash you have on hand here in January. And also then going through what your cash and your credit sales are going to be to get your total available cash available in that month. In this month, we're looking at January. And then go through and put in what your expenses are and budget for what you hope to be able to spend in these particular areas. And then have your total cash paid out, which would leave your cash position at the end of that month. Now, the beauty of this tool is that as you meander through this year, you're going to probably find you're going to have some months where you have less cash than others to work with. Some of those months might be really stressful and might be really tight, but it's good to know those months going into this. It's where you could almost project where you're going to have areas and timing of less cash than you normally have. And if sales get better or if they get worse, you can adjust it on the fly with your cash flow forecast. We will be sending out some of these tools, many of these tools with a wrap up of this webinar. So when you get a webinar or email from us regarding the wrap up of this webinar, it should have this tool in it and a few others. Again, next week, we'll be here with Tom Weir, and Tom Weir's The Blueprint of Small Business Success. But now it's a time to talk about some of the tax strategies and some of the tax issues moving forward in 2023. I had the opportunity and the great pleasure of sitting down with Jay Thompson, remotely, of course, late last week, and actually recording on demand for this particular session. Knowing that travel might be a little bit hectic this week, so we're going to bring in Jay Thompson and a little bit of a dialogue that Jay and I had on year-end tax efforts and tax planning going into 2023. And just to set this up before we get Jay going here, one of the things that that we have is we talk a little bit about, on the beginning, we talked about the employee retention credit. And the employee retention credit has nothing to do with that. But the employee retention credit actually will work with you, and you can still go back to 2021 on that. Jay is going to talk about a few of the pitfalls that he has seen as a consultant, as Jay Thompson is a SBDC consultant who has actually been here for, a number of years. He continues to do a lot of work with our SBDC clients and works in a lot of areas as far as accessing capital and a lot of the other areas that jump out. And so when we talk about the ERC, what it entails now for going back, and has for several months, because it ended on September 30th, 2021. And so in September 30th, 2021, what happened was that any applications would have to be done with a amended payroll tax return. So a 941X on the federal level. And as we're just waiting for Maureen to boost Jay up here and join me, and here
Jay
comes
Thompson.
Yeah.
Great to have you on this week. Kind of a casual webinar week, being only 362 more shopping days till Christmas. But more importantly, we're here to discuss the 3 days left in this year in order for people to either save money on their taxes, come up with last minute deductions, maybe do some things from a legal perspective that they need to take care of, and only have 3 days to do so. So let's take it away. Take it away, Jay.
Hey, well, it's a pleasure to be with you today, and looking forward to spending a little time together with you here. So, all right. So we were talking earlier about how to save taxes, right? Because, people work so hard to make money, and it's like they're putting in a bucket with holes in the bottom, right? If you don't protect your taxes from going away, they disappear and they're gone forever. So what are some of the things you can do? Well, every year, one of the big items that comes to me, and I'll give you an example, is people that don't file their taxes. And business taxes are different than personal taxes. On your personal taxes, if you don't file, the penalty is 50% of the tax that was due, and away you go. If you didn't have any tax due, then there's no penalty, and it's kind of a wash. But business taxes are different. If you have a corporation, C Corp, S Corp, or partnership, an LLC, and you don't file your tax return, the penalty is $215 a month per member or per stockholder of that company. And something I had earlier this year is there was a client that came to me, and is two couples that had started a new corporation right in February of 2020. And then we know what happened in March, right? Everything got shut down with the pandemic. So they set up this corporation, and then they didn't start their business in 2020 because of the pandemic. And then things were still not so good in 21 for them. But they came to me in March of 22, and they said, hey, we want to get this business going now. How can you help us here? And I said, well, let's look at your registration. And we looked at it, and I saw a couple things there, something called a statement of information that hadn't been filed. And then I said, hey, did you file your tax returns by any chance? They go, no, we didn't do any business, so we didn't file. Well, I'm not a big mathematician, but $200 times 4 people is $800 times 12 months is $9,600. Wow. And the IRS is pretty kind. They cap it at 1 year, 12 months, but they had all of most of 20 and all of 21 that they're subject to that penalty. So I did give them a couple of tips on how they might be able to get those penalties mitigated, but the bottom line is technically they're responsible for that. So bottom line is, if you have a legal entity such as a corporation or an LLC, you need to be mindful that those taxes are due March 15th, not April 15th. They need to be filed and before you can file your personal return, because usually like a S corp and a partnership LLC are what's called flow through entities. So they have to be done first, and then any net loss or gain will flow through to your personal returns.
So Jay, I guess that if it's the first time it happens, you have a chance maybe to get those penalties abated and maybe the charges gone, but probably if you're a repeat offender, they probably start sticking it to you.
Well, it's best not to even put yourself in that position. So
Right.
that's the best way to go. And then the other thing is mentioning the statement of information. If you have a California legal entity, LLC or a corporation, you're required to file an annual statement of information for the corporation, and it's biannual for an LLC. LLCs, they charge $20. Corporations, they charge $25. If you're late, there's a $250 penalty there too. So we call those stupid taxes because you could have easily avoided them by filing on time, but if you didn't, you're going to pay the pipe. So just something to be mindful of.
Good to know.
Yeah. Speaking of entities, the next way you can save taxes is by choosing the right entity for your business. So most businesses start off as sole proprietorships, but when you start getting a certain amount of activity, there's some things you can do to minimize taxes by forming a corporation or an LLC taxed as an S corp, and it's just another part of your tax planning and strategy besides the legal protection these things offer.
Yeah, and a lot of times at the SBDC, we have clients that come to us and they'll be looking at the legal structure of forming an LLC, an incorporation, an S corporation, as a way of trying to minimize the risk for the business. And oftentimes they haven't even looked at liability insurance, which in many times should be their first and foremost method of protection for their assets and themselves.
Absolutely, you always need proper insurance to protect you.
So after we've selected the correct entity and kind of done it for a variety of purposes, because there's an annual filing fee, but it does give you the limited liability protection. It gives you oftentimes lower taxes. So we've done that to correct our entity. Then what do we do?
Well, a lot of people come to us and they want to form an LLC. And so the first thing I ask them is, why do you want an LLC? And they usually can't answer that. They were told they needed an LLC, or they saw it or heard it somewhere. But the bottom line is LLCs don't save you any taxes. Yeah, that's not 100% true, because you can form an LLC and you can elect to be taxed as an S corp. And that might save you some taxes because S corps don't have the self-employment tax. There's some other rules with that. We have to pay reasonable wages, but you can pass through part of your income without the self-employment tax on. But there again, it's important to understand why you want the legal entity and then how it would best fit for your business. The short answer on that is usually we would recommend S corp for an operations type business, and then we would recommend a partnership LLC for a passive income type business, such as rental properties.
Jay, you've had a number of clients that have done the ERC, the Employee Retention Credit. It's something that we've talked about on Webinar Wednesday for, I don't know, probably 18 months. And for many people, it is a real benefit. It's a real saver. But you don't always see that. Sometimes you see some other issues that pop up. What are some of the issues that you're seeing with the ERC with some of the clients you work with?
Well, the ERC is a great thing if it applies to you and you meet the qualifications test, but it can be a bad thing if you don't. So for 2020, the rule is that you had a 50% reduction in revenue compared to the same quarter in 2019. In 21, the rule is that you had a 20% decrease in the quarter compared to 2019. So I've had several people come to me that said, hey, I want to get this ERC credit. And then you look at their financial statements, and right there, they don't qualify. Now, there's a lot of mills out there that are charging people several thousands of dollars to file amended 941s, and you can file those amended returns and get the credit, but you're setting yourself up for an audit. You're going to repay those taxes, and you're also going to have penalties.
It seems best if you are working with your accounting, your financial professionals, and others when you apply for that. But yet again, there are so many people doing that, some of who may be qualified, some who may be not, providing that type of advice and that type of work. That's
true. And I always recommend people that if you have a business, you really need to have a tax professional. It's part of your professional team. You know, if you're just a W-2 employee and you don't really have any other assets like rental properties and things like that, yeah, go ahead and use TurboTax or one of the other softwares. They're great for that. But once you start getting into business type returns, there's so many little details and nuances that, you know, a good tax pro will save you many times their cost in tax savings.
Okay, I agree with that wholeheartedly. Of course, until you go to sell your business, and then you need a different strategy, and it's to pay more tax, have more income, show that what the business potential really is if you're selling that particular business. What are some other ways that people can save on taxes, Jay?
Well, a big one too is if you have a business, you can pay your kids. And this is not misunderstood by a lot of people, but if you have sole proprietorship or partnership LLC or a disregarded entity LLC, you can pay your kids for 2022, you can pay them up to $12,950. That's a deduction for the business, right? So you're saving taxes there. And then your kids, if they're under 18 years old, they don't have to pay any tax on that money either. And that means not only income tax, but also the self-employment tax.
Is there any?
They hit 18, that doesn't work anymore. That's just a little loophole. And that is, you can look that up. That's IRS publication 929.
What is the age that it goes down to? Obviously, if I had a 5-year-old in the household, I couldn't pay the 5-year-old.
Well, there's some rules and regulations, like always with the IRS. So what you pay them needs to be reasonable. It needs to be commensurate with the activity that they're providing for. But you could have a 5-year-old in an ad, for example, and maybe you don't pay them $12,000. Maybe you pay them $1,000. But still, there's a lot of opportunity there for bringing your kids into the business. And, you know, quite often you want your business to be a family generational type business, right? So you want to build something for your family that will go on into the future. It's important to get your kids involved in that. So I have clients that have kids 9, 10 years old that are doing filing or they're cleaning the office, and all that can be compensated for.
Jay, I know you well enough to know that you're a believer in to plan, whether it's planning for your business, business planning on your technology you might need in your business with a technology plan. How do you feel about tax planning?
Tax planning is like number one, right? So if you want to save taxes, you need to plan ahead of time, because, you know, it's just a couple of days till the end of the year here. And December 31st at midnight, a lot of things are cast into stone. Some things you can still go back maybe and massage a little bit, but the majority of things are going to be set in stone there. So you need to do it ahead of time. Matter of fact, right now you should already have your 2023 plan. It should be set, and you should be strategizing on that.
Okay, so what are some of the last, we're down to literally 3 days of 2022.
Mm-hmm.
I've made it quite public that I'm glad 2022 is going away. It can go. Get out of here.
Yeah, I'm looking forward to a great year for 23.
Yeah, 23 is going to be a great year. It's going to be as it's going to be as much of a great year as 22 was a miserable year. So, so 2022 though, to get those last second tax deductions, and I mean truly last second, we're down to 3 days. What are some of the things that small businesses should look at that they can do in just the last few days of this year?
Well, you know, the IRS has what they call safe harbor rules that apply to many things. And one of those is prepaying your business expenses. So if you're on a cash basis in your business, you can prepay some 23 expenses in 22, get a deduction now. And that might lower your taxable income. There's rules as always. So the rule is you can only prepay 12 months in advance to take that deduction. But with some proper planning, there you go. That could be quite a tool to help you reduce your taxable income. I'll give you an example. Say you're paying $3,000 a month in rent on your building. Okay, so you write the check, put it in the mail to your landlord on December 31st, $36,000. Now you just lowered your taxable income by $36,000. And by the time your landlord gets that check, it's going to be first week of January. So they get what they want, plus a little bonus having all the rent prepaid ahead of time. It doesn't affect them negatively for their 22 taxes by receiving the money early. You get the deduction, they're happy, you're happy, and away you go.
Yeah, I know some people will actually do the opposite of that. They'll stop billing for services. They will want to accelerate that income into next year and postpone that. How does that?
That's another thing you can do. You can, if you build somebody, say, the 1st of December, they might pay you before the end of the year. Well, if you waited to the end of the month and you bill them, they're not going to be able to pay you until January because they don't have the bill yet. So that pushes the income. Again, if you're on a cash basis, the income's attributed when you receive it.
So there used to be a thing called the Section 179 deduction. I remember back in the day. Maybe it's still available, and you're going to tell me this now, but Section 179 gave you the opportunity to immediately, and I mean immediately, expense your assets. So, you know, I think I know you know this, but you know, it's cost recovery of asset purchase is meant to be over that life of the asset. Normally, that's how we look at things. You buy a car for $30,000. Number one, you got a good deal. Number two, if you have it for 5 years and you're going to wear it out, you take $6,000 a year. So how does Section 179 work? And is it still available?
It is still available. It's changing January 1st of 23. But today, if you needed a new computer or a printer or some office equipment, you can buy that today and write the whole thing off as 100% deduction.
What if I wanted a new vehicle? How does that work?
Well, the old rule was that if you had purchased a truck or SUV or a vehicle basically of 6,000 GVW or greater, you were able to write off 100%. That changes in 23 back to the old rule, which was 25,000 maximum, then you would depreciate the rest over time. So there's a good example. Say that you have an extra 100,000 that you don't know what to do with it. It's going to be taxable to you. Well, with the old rule, you could go buy yourself that new GMC Denali for $85,000. Boom, 100% deduction.
And that's even if I pay for it over 7 years?
That is correct. You just need to purchase it.
That is such a sweet deal.
That is. I hope that comes back because that really helps a lot of our clients.
Mm-hmm. So what's next on your list of last second tax deductions for 2022?
Using your credit cards correctly.
Okay, maybe my wife should be listening to this part of it.
Yeah, so let me look at my notes here for you so I don't misspeak. But basically, you could buy things now using your credit card and deduct it for 22, not have to pay for it till later.
Okay, so that's Should you keep your credit cards separate, your business and personal credit card, or can you just use the same card?
Well, it's best to have a separate business card, but in real life, that doesn't always happen. So if you do have a business expense on a personal credit card, you need what's called an accountable plan. And basically, accountable plan is documentation that you create to reimburse yourself for those business expenses.
Okay, so, and I don't think people really differentiate too much in their credit cards. Some people will have a corporate account with multiple users on it, things like that. But I think for most people, they use their credit card that has the best rewards program.
Well, that's true. So if you're going to use, again, if you're going to use your personal card, that's fine, but you need to reimburse yourself from the business. Excuse me. Reimburse yourself from the business and do it correctly. Don't pay your personal card with your business account, because that's commingling, and that can pierce your corporate veil.
So piercing the corporate veil would mean that even if I have a corporation, the IRS could still come after me for liability, or other people could as well.
Correct. And basically, you're not operating or acting as a business. You're just operating your own area.
Okay, what else you got for us?
Let's see, what do we have? Oh, here's a big one. Don't assume that you're taking too many deductions. Excuse me.
Okay.
A lot of times people will come and they'll say, well, I can't deduct this, or I can't deduct that. When you're dealing with your tax pro, bring them everything and let them decide whether it fits or not into your tax plan, right? So you don't want to disqualify things that are a potential write-off for you.
Okay.
There are ratios that we look at when we're doing taxes for people. We want to keep you within certain parameters, but if it's a legitimate deduction, take it.
Mm-hmm. So I hear people talking about qualified improvement property, or QIP. What is QIP?
Well, say you have improvements to a building or non-residential real estate, think like an office building or retail store or shopping center. Those improvements typically are written off over 15 years. With the QIP, you can write it off all at one time.
Okay. Well, sounds good. Any other last second tax deductions or something that you can think of while we're still sitting here in our plaid, enjoying this post holiday break between Christmas and New Year's?
Well, there's probably 100 more things we could talk about, but this should get you started. And probably the main takeaway is, you know what? 22 is over. We're just starting 23. I need to do some tax planning now.
Yeah, good advice. Good advice. Okay, well, Jay, congratulations on a great year in 2022. And I know you're looking forward to 2023. Any parting shots of wisdom before you leave us today?
Yeah, Happy New Year.
Yeah, I like that one. I like that one. And yes, Jay, I will be working on taking down my Christmas lights behind me.
Very good.
Okay, well, Jay, always a pleasure. Thanks for joining us today.
Thanks for having me.
And we'll see you around.
Okay. Well, that was certainly fun. Let's jump in and see what we have as far as questions go. Reset this a little bit. Now let's see what we have as far as, we have one question on the tax side of things. And it is, can an S Corp pay kids or just LLCs and sole proprietors? My understanding, and we will verify this with Jay, but my understanding of that is that yes, an S corporation is an entity like an LLC and others that can pay children for goods or services typically services that they perform in the business. Okay, next question. Do I need to cash the check from the corporate account when I reimburse myself to count as a business expense for this year? Boy, the timing of that is a really good question. Do I need to cash the check? And it's going to come down to, if you're a cash-based taxpayer, is really what it comes down to. And also, oftentimes corporations are accrual basis, so it would be like when you receive it. So it's going to come down to what type of a taxpayer you are. What type of an accounting system? Is it cash-based or is it accrual-based? Cash-based would be you can spend everything up until December 31st. And you can actually then, as far as income, if you have a check and you didn't receive it until next year. So that's a good question that we'll forward to Jay as well and get you an answer by email. Yes, question about the Excel spreadsheet. We will include that in our email this week, later this week, maybe the weekend, toward the weekend, maybe into next year, but probably sooner. We'll send you a recording of this. We'll send you some of the resources that we talked about and kind of take it from there. Okay, next question is on the RRV tax credit. This is not in effect, right? It is in the works in DC. That is correct. It is not law. We're just speculating on potentially it can happen. So to my understanding, it hasn't passed either House or Senate at this point, but there is considerable movement. And so it is hopeful that since it's not going to be a big outlay, that it'll have bipartisan support. Some of the stuff that has happened with it has been on a bipartisan basis, so that is always good. So the restaurant revitalization tax credit is moving, but it is not in effect at this time and will not be in effect most likely unless they make it retroactively until 2023. Okay, last chance. Can grandkids be paid as well? My answer to that would be definitely they can be paid as well, but we'll have to ask Jay if it can be deducted. So we will get you answers to all of our tax expert as he meanders his way back from Texas and go about it that way. So just hitting the chat real quick to see what we had in chat. Let's see here. What was the name of that statement needed filing? Okay, that one's a little difficult. What was the name of that statement that needed filing? Gee, we talked about a lot of different statements. I'm not real sure of that, of what exactly the question is. But I will kind of look and try to get an answer for you based on the time of your question, going back and looking about what we had talked about. How do I gain access to marketing assistance in Inyo County? Well, that's easy. All you'd have to do is sign up for services with the CSU Bakersfield SBDC covering Kern, Inyo, and Mono counties. And we will get you hooked up with a consultant. Okay. Meandering down the chat box. Let's see. If I'm paying my kids $12,950 a year, do I also need to give them an I-9? You know, that's a great question. It probably wouldn't hurt. You know where they are. It's just like, hey kiddo, sign here. I see the appeal in that particular question, though. Is they're my kids? I can verify that they are they're a citizen because you gave birth to them. So anyway, okay, so back onto that statement of information, an SOI from the state of California to file annually. So that must be one of the statements that is done with the California Secretary of State, usually for businesses that have that other entity that Jay talked a little bit about. We can get that information, that answer from him directly. The statement of information basically is for non-sole proprietor type vendors who do the annual filing with the Secretary of State's office with the state of California. Okay. So let's see. Can I write off interest on EID and how? And I have guardianship of a 16-year-old. Can he be paid? My answer to that would be most likely yes. But again, when we get our tax guy back with us, we'll ask him for sure. EID. Maybe that was EIC. Okay. Well, there's really a full-hearted stab, just not great results of me answering your questions in the chat or in the question box for that matter. But that's the way it works sometimes, occasionally. But please do follow up with an email. We will try to pull these questions out of the webinar and we will get those over to Jay and let him reply to you and see exactly where you go from here. But that's going to kind of do it for this year. So, you know, 101 just can't end on time, can we? So for Jay Thompson, it's great having you guys along this year, and we'll be back next year. We'll start with the blueprint of small business success. Mr. Tom Weir will be joining us. We'll have a lot of different activities happening every Wednesday, Webinar Wednesday, our 10th anniversary coming up, number 257 next week. Everybody have a very happy new year, and we'll see you next year. Bye-bye, everybody.